Welcome to today's morning report on Wednesday the 7th of September with me, Rich Market Analyst at Hantec Markets. We've got a fairly mixed open to the markets actually. Equity markets are very mildly higher, just literally trading around the flat line as I look at them. CAC is dead flat, FTSE couple of points higher, DAX 6 points higher. I mean, it's basically where the markets have sort of moved yesterday quite significantly to price out this September rate hike. We had the ISM non-manufacturing PMI, which came out very disappointing again. What you had was a drop from 55.5 last month to 51.4, which was the lowest since 2010, and also the biggest monthly drop since I think it was since November 2008, so really strong decline there on the ISM non-manufacturing, and that sort of has put to bed, I think, chances of a September rate hike. The sort of Fed funds futures fell dramatically yesterday in response to that, and subsequently the dollar got sold off significantly. Show you the dollar sold off significantly at the same time as the 2-year Treasury yield dropped also very sharply. 10-year not so much, but also there was a reaction obviously on the 10-year, but certainly the 2-year is sort of more sensitive to the sort of front-end rate hike expectations really, and certainly the dollar has been impacted, and that sort of impacted across forex markets, across commodities. We had all the majors reacting strongly to that dollar move, and also the commodities prices as well, strongly higher. The interesting sort of subplot to that is the oil price, which is still sort of trading around with these expectations of this Russian and Saudi oil cooperation, production cooperation. It's slightly higher again today, but mildly only mildly higher, sort of about just under 1% higher on the WTI. Now, in terms of your other commodities, gold and silver are mildly lower, as the dollar's just sort of clawed back some of the losses from yesterday, but nothing too significant, and certainly looks like it's just unwinding a little bit of that near-term overbought move that I'll show you on the charts in a little bit, but very interesting moves that we've seen, and dollar negative seems to be the way that the market is moving. Now, in terms of your data today, you got a little bit of UK data this morning. You've got the industrial production numbers, and they're expected to come out slightly better than expected. Another look at how July was performing, as in the first month post-Brexit. So this will be very interesting again. So 1.9% on the year-on-year industrial production. Let me show you the charts. I mean, it's sort of been there or thereabouts for the past sort of couple of years, really. I mean, having sort of improved quite strongly in the last sort of 2-3 months, it's sort of settling to where it was in 2015, pretty much. And then into the afternoon, we've got the JOLTS jobs openings. 5.58 is the expectation there, basically in line with where we've been for the last sort of few months, really, on that JOLTS number. And also, you've got the Fed Beige Book this evening at, if I can get my chart to work, there you go. Fed Beige Book this evening, that will be sort of giving the Fed's outlook really on the economy, but it will be watched certainly. But those are the numbers, and we've also got, sorry, I just forgot there, the Bank of Canada giving its monetary policy update. No change expected on the Bank of Canada this afternoon. Show you here, no change expected, 0.5% on the rates, and that could be accompanied by a bit of a dovish outlook as well, as they sort of battle with sort of falling inflation, inflation dropping away. Retail sales recently were disappointing, and also the growth numbers have not been all that great either. So a few reasons why the Bank of Canada could well be continuing on its dovish path. But that takes me to my chart today, which is the FTSE 100. Now, we had a strong upside move on the sterling yesterday on the back of that ISM non-manufacturing data, and the FTSE 100 dropped away. Now, the reason the FTSE 100 dropped away is because it drives around about 70% or so of its earnings from abroad. So, if translated back into sterling, when sterling is stronger, that is a negative for FTSE 100 revenues and earnings. So that subsequently the FTSE performed very well post-Brexit as the sterling was weaker, but when sterling has started to react higher, the FTSE 100 has dropped away. There is a negative correlation between the two. So we're looking at the FTSE 100 possibly underperforming other markets. Basically, they're all flat today, so no real move yet. But yesterday, the DAX and the CAC were higher. FTSE 100 was quite sharply lower. So you look at these technicals on the FTSE and you think, well, this is more of a range play now than it's been for a while, really. Dropping lower, back from that reaction high at 69.28. That's the lower reaction high underneath 69.55. Gathering a little bit of near-term momentum. You've got the stochastics which are rolling over. You've got the RSI failing at 60. Now that's an interesting signal as well that would suggest perhaps we're now more range bound. You've got the MACD line still falling. On the hourly chart, you sort of dropped back again. There was a sort of a minor sort of pivot level around 68.50, which had been supportive until that ISM non-manufacturing PMI data yesterday, 68.50 and that sort of becomes a bit of a near-term resistance today, 68.25. So you're about 25 or so ticks away from that now, but certainly it looks as though this near-term pivot could be a bit of a ceiling. And the momentum indicators on the near-term chart also are fairly much range-bound. You've got the current sort of corrective slide coming back. You've got this MACD lines falling away, the stochastics in negative territory, so that would suggest that little near-term rallies are being seen as a chance to sell, and you'd sort of look for further downside. Not too much, I wouldn't say. You've got a sort of a minor sort of band of resistance that comes in around sort of 6,800 down towards 67.80 area as your initial support, and then the 67.23 low. And I'm not expecting this one to be too much to the downside. I think that this is going to turn out to be a bit of a range play, but it is dropping within that range, and I think there is further weakness that we could well see on the FTSE today. And as I speak, FTSE's just turned negative on the day. So I wish you good luck in your trading today. Little selling into rallies, I think, on FTSE for the time being. So I wish you good luck in your trading, and I'll speak to you later.